Yo, what's up, everybody? It is Tuesday, October 15th, tax day. If you filed an extension, your returns are due today. Some people make payments. Last year, in this period of October 15th, for about a week, we had a 75 billion net drain, and we had like a 6.5% drop in the S&P. I'm not saying necessarily that's going to happen again, but we tend to see market pullbacks at times when we have significant tax drains. They may not last very long, but they are there. Folks, when I do the fiscal flow analysis, I like very much to look at year-over-year comparisons because that gives me information. And the information that I'm looking for, like I look at fiscal flows like kind of energy, okay? And the way I think about it is if it takes a certain amount of energy to keep the economy growing at, whatever X percent, and to see that, let's say, the trend in the stock market has been positive for the year, when you have a certain amount of energy, and again, I equate fiscal flows to energy, then I like to compare what is happening in the new fiscal year compared to what happened in the previous fiscal year. So these year-over-year comparisons are important to me because they let me know, is the energy staying the same? Is it increasing or is it decreasing? And even though we're just barely into the fiscal year 2025, today's October 15th, so we don't have a lot of data, but I'm already seeing a decline year over year in the fiscal flows. Now, it's too early to draw any conclusions from that because in the beginning of every fiscal year, these comparisons can be very volatile, and, you just really have to give it some more time for the data to compile, and then we get a better idea to look at the trend of what's happening. Not so much the nominal number, okay, the nominal amount, but the trend. Is it going up year over year? Is it flat year over year? Is it going down? I would say like the danger to the stock market and the economy would be if it's going down. If it's flat, I mean, basically we could essentially see a repeat of 2024 of this year. If it's going up, then we're just going to have a booming market. We may have some increase in inflation. I don't know. And if it's going down, which is my prediction, okay, because I've been telling you guys that, we have the rate cuts. There's going to be more rate cuts. I'm already starting to see, as I mentioned yesterday, I'm already starting to see a decline year over year in interest income transfers, and that's only going to increase as the Fed continues to cut interest rates. We'll get another 25 basis point cut in November. We'll get probably another 25 basis point cut in December. And I also said that next year, I've been mentioning that we got a smaller increase in the COLAs on Social Security. That's the cost of living adjustment is going to be up 2.5%. This year was up 3.2%. Before that, it was up like 8.7%. So we've had some really big increases. Next year, not so much. And we have the expiration of the Trump tax cuts. Maybe that'll get extended. Again, we got to get through the election and we got to see what policies are put out there. Trump talks a bullish game. But he's very unpredictable. We don't know. But let's assume if he gets elected that, we will see an extension of those tax cuts. So there's going to be a lot to determine in 2025. We're still too early for that. I'm going on the basis of the rate cuts and the smaller increase in the cost of living adjustment for Social Security and those programs. So again, I'm starting to see a year-over-year drop. I mean, this past, months, I've been telling you about the drop in net government transfers. If leading flows start to drop year over year, you're going to see even bigger declines in net government transfers. Net government transfers, if you're new to this, that is the terminology I use for the deficit. I don't use the word deficit anymore. I don't use that terminology because it is misleading and it is unnecessarily, tainted with kind of a negative slant. All right, it's negative. It's a deficit for the government's balance, but it is a surplus for the non-government's balance. That's us, and that's what we should be concerned with. You're not going to hear this on the media. You're only going to hear this from me. I mean, we want the government to net spend. In other words, spend more than it taxes away from us, because that accumulates in the non-government's financial balances. That's potential energy, all right? So, we want to see that. But if that's shrinking, which it was this year, by about 265 billion. That's why we have the deficit this year, or the net government transfers fell down to around 1.4 something trillion. The previous year it was like 1.7 something trillion. So that just subtracts from the non-government's balances. We want those balances to increase. That's the swimming pool. We want the water level to go up, not to go down. So I keep an eye on that. And I'm thinking, if my predictions, if my forecasts are correct, we're going to see a shrinkage in that in this new fiscal year. By the way, something very interesting. I think I've seen a lot in the last couple of days. I've seen a lot of Wall Street brokerage firms and banks raise their estimates for the S&P 500 for 2025, even for the end of this year. I think I'm an outlier. I'm the only one that I have seen so far who's saying, we're not going to get these rosy projections. All right. A bunch of banks, a bunch of Wall Street brokerage firms have increased their outlook for the S&P 500. I'm on the other side of that. And frankly, when I'm on the other side of a whole bunch of other people, I feel very comfortable and confident in that situation. When I'm on the same side of a whole bunch of other people, I get nervous. That's what freaks me out. I mean, most people are the opposite of me. They want to have company. They want to be where everybody else is. They want to be with the crowd. I just, I run away from that like the plague. And I don't do it just to do it, okay? You might say, well, that's a bad strategy. If you're doing that just to do that, then you're being emotional and you're just taking sides when there's not necessarily a real justifiable rationale to do that, when there's not when there aren't fundamental conditions that say I should be doing that. But it's not the case. I've laid out my case. I've said that the bond trade is going to be the most important trade in 2025, not the stock market trade. And so I've been laying out my case. I've laid out my case, and it ends up that I fall on the opposite side. I didn't know they were all going to increase their estimates and their outlooks. I mean, I've been giving you my case now for a couple of months, and it's just now that I'm starting to see that they're upping all their forecasts for the S&P 500. So, I mean, I'm on the other side of that, not just because I woke up today and said, oh, I see a bunch of banks saying we're, raising their forecast for the S&P. I'm going to go opposite just to be opposite. No, I've had that position, and it just so happens that I am falling on the opposite side of what these banks are forecasting. And again, when I see that, and it's, I'm confident in my outlook, and I am on the other side, that makes me even more confident. All right? That makes me even more confident. So, today we had a sell-off. It could be related to this tax drain that I mentioned at the top of this video. We had a bounce in the 10-year Treasury Treasury note. In other words, the yields came down a little bit. I said yesterday that 10-year note was bouncing off of some very strong support. I also said yesterday that, yesterday was a bank holiday. The bond market was closed. It was probably the reason for some of that downward drift. I mean, I believe Thursday we have retail sales. Now that could be, a market mover. If we get a strong retail sales number, they're going to jump all over the bond market again, saying like, oh, that's it with the rate cuts and blah, blah, blah. Again, I don't pay attention to legacy data. And that's what that is. All this government data is legacy data. In other words, it's telling you what happened, 30 days ago or 1 quarter ago. I mean, to me, that's not very useful information. I'm trying always to look ahead. I'm trying to determine what conditions are in place right now to give us a reading of what's coming. And again, that's the fiscal flows. I always say that's the first derivative of all economic activity. And that's why I pay so much attention to that. Anyway, that's it for today, folks. Please like and subscribe, and go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. I send out emails all day long, trading ideas, market commentary, and other interesting things that I might come across. I'll see you tomorrow. Bye.